Hello and welcome to the stock market analysis. What is the market doing? Let's take a look. This is the S&P 500 futures, and well, we have a very bad correction here, but it looks like it's going up here, and maybe it might form a cup with handle in the smaller time frames. Let's take a look at the 60-minute chart. Sorry about that, it takes some time to load. Alright, maybe we look at the 2-hour chart. Okay. Not a very nice cup with handle pattern, but you know, what we really want to do is for it to absorb the supply that has come around here. This is supply area, and what we need to do is for it to trade sideways and then break out of this downtrend line. There's quite a lot of supply or resistance in this area. Let me just draw the resistance area for you to see. It's about here. If you draw, yeah, congestion areas are resistance areas. This whole thing also is resistance area, but it's kind of trying to form a variation of the cup handle pattern. Usually if it trades sideways a bit and then break above this downtrend line, we probably can see it going higher, because remember, when there is supply coming, supply needs to be absorbed. Supply just means resistance, or what it means also that people who bought here have lost money. So we need to absorb the supply here before going back up. Let's go back to the daily chart. Right. Internet is a bit slow, but you can see that this S&P 500 found support at this area. So here is an area of demand or support. Go down, and now it's kind of like trading sideways in the daily chart. And the previous day we have this kind of like lower wick or bottoming tail, and it's trying to reject going lower. So we have a higher low here. This is a low here. So what we need to do for it to absorb the supply area is for it to trade sideways a bit more before breaking out higher. Otherwise, if supply is not absorbed and it can't go above this downtrend line, we might have another sell-off down. Because here demand has kicked in, demand has been absorbed, and if it cannot break above this downtrend line and absorb demand cannot support it, and the market might go down to this area of support. Let me just draw the area of support for you. This is another strong area of support, right? So still need some patience. Right, we have found a short-term bottom here, but we need patience to wait for the market to go back above this downtrend line for a sustainable rise. Let's take a look at the QQQs. All right, QQQs. I've drawn the support area and resistance area. And this is resistance or supply area. Let me just remove it and draw it as a rate. It's easy for you to see. Rate means resistance or supply. All right, this is a supply area. This is a demand area or support. Notice how after it breaks this area, it goes down. And when demand comes in, we have a doji goes back up. Right, and what we need to do is for it either to trade sideways a bit or go down to form a double bottom. Yesterday actually we gapped down, but it rose back up. Let's take a look at the Q in the 60-minute chart. You can see that how it gapped down but closed the gap. So what we really want it to do is to absorb the supply around here before it can go up. Either it trades sideways a bit before breaking up, or a double bottom. Okay, so if a double bottom forms, there's a high probability it might go up and go way past the supply area to this area. And if after that we trade sideways, there's a possibility we might break higher. Let's move to the Dow, DIA. My internet is a bit slow here, so please be patient with me. Alright, Dow, gap down, but close a bit higher. Now the reason why this area cannot go back up, cannot go above this downtrend line is because that here is an area of supply. This is a 60-minute chart. So supply always needs to be absorbed. So this area would have helped to absorb the supply here. Now what we want to do is to look for a double bottom in the DIA, trade sideways and break above this downtrend line so that we can go higher. If this support area or demand, right, this is an area of demand. If this demand area does not hold, we might see the DIA falling more. Now let's go to the hourly daily chart, and you will see why this is an area of demand, because there's past consolidation here. Past consolidation is an area of demand or support. Okay, so we have a small bottoming tail here that tells yesterday price reject to go lower, but what we really want to do is for it to trade sideways a bit, do not fall below this support area, then trade back above this downtrend line to have a sustainable rise back. Okay, watch this demand area or support area. If this does not hold, we might see it continue to fall down to this level, which is where the 200 MA meets. So we have analyzed the three major indexes. Always remember that we need to analyze bar by bar what happens. So every day we look at each bar. I've gone through this with you every single day. You can come and look back every single day. It's important to analyze every day, but it's important also not to trade every day. Alright, there's a difference between analyzing the markets and taking action. You only take actions when there is a strong area of value or you're very confident of the trade. But we need to know where the market is likely to hit, what it's likely to do, is it high probability or not. Let's say if you buy here, it's not a very high probability trade because we have probably not absorbed enough of the supply here. So your chances of winning are slimmer. So why do you want to put yourself in a position that is 45% successful? Instead, you must wait for a time where you are 75% probability of success. So that's part and parcel of trading. So I won't go into gold or okay. Let me just go into gold. This what because the internet is so slow. Anyway, let's go into gold. Gold has not broken below the daily 20 MA, so there's a possibility that it might move up. But if it forms a double top, then we might see a decline below here and even move lower. Crude oil, very briefly, still trying to find support at the 50 MA. If it continues to trade sideways and find support from this 50 MA, then it might continue the upward move. And last of all, Bitcoin. Bitcoin is just still trading sideways. This is an area of demand or support area. So this demand should hold. It must hold. If not, it will be demolished, and we might see prices going below to this area where most likely you'll meet the 200 MA. So let's go back to the SPY. SPY is almost the same like the S&P 500. I would really want it to either make a double bottom, trade back above this downtrend line, or trade sideways and break above the downtrend line for a sustainable rise. Otherwise, if it drops below this demand area, you might see it go down to the next demand area around here. So I hope this helps, and I'll see you in the next one.